that gently and it comes on, you can speak.
Yeah. Good afternoon, everybody. I think we'll make a start. There are 3 more councillors still to come. We think that they've been caught up in traffic caused by the fuel problems. Here is one of them. But we will make a start. Welcome. You're here, Nick. Welcome to this meeting of the Audit and Accounts Committee, first in Newshire Hall. The County Council allows filming and photography at its public meetings. So Andrew, feel free to take pictures, and if you wish to tweet during the meeting. Can I ask though that everyone present turns their mobile phones to silent or vibrate whilst the meeting is in progress. Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. A couple of housekeeping points to those new to the building. There are toilets available in the corridor adjacent to this room on my left-hand side. And depending on how we're getting on, I will briefly adjourn the meeting after about 2 hours for a comfort break. There's no fire alarm test scheduled for today. So if the alarm is sounded, I will adjourn the meeting and we will all make our way downstairs and out of the main entrance. The muster point is on the green opposite the main entrance. I propose to waive the committee procedure rule limiting members' contributions to the debate. However, we have a lot of business to get through, so I would ask all members to keep their contributions concise. I think as there are 1 or 2 new faces, and particularly as we have 2 members of the public present, it might be helpful if we just quickly run round the table and say who we are. So Fiona, do you want to start and then we'll come round?
Fiona Coates, I work for the pension service, so I predominantly do the accounts for the Cambridgeshire Pension Fund.
Chris Bowden, member of the council for Whittlesea North Division.
Thanks, sir.
Neil Hunter, Head of Internal Audit.
Dawn Cave, Democratic Services Officer.
Nick Gay, Market Ward in Cambridge and Vice Chair.
Tom Kelly, Chief Finance Officer and Director of Resources.
Stephen Howarth, Assistant Director of Finance.
Alison Whelan, Councillor for Ely North.
Mark Hodgson, Audit Partner, Ernst & Young.
Thank you very much, everybody. Welcome. I think you're around here, Alan. Alan Sharp, Councillor, and I forget which division you are, Alan. Woodton, thank you.
Yeah, the lorries are blocking. It's taken about 15 minutes to go the gravel rig.
Yeah. So we heard. So we're just making a start slowly. Mike, could you hear all of that if we speak clearly into our microphones? Yeah, and people on the watching us can hear. I'm
Chair,
just sort of looking for Fiona. I beg your pardon.
Yeah.
So Fiona, and then Janet, and then I can't read your name, I'm afraid. Fiona.
Thank you, Chair. Fiona McMillan, Director of Law and Governance.
Janet.
I'm Janet Atkin. I'm Assistant Director of HR Services.
And Ben.
Hello, everyone. Ben Barlow. I'm the Group Accountant or Fund Accounting Manager for the Cambridge Pension Fund.
Thank you, and thank you, Dawn, for reminding me. Okay, let's get started with the main parts of the meeting. First of all, apologies. Dawn, do we have any apologies?
No apologies, though we're still waiting for Councillor Taylor.
Okay, and does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? Alison.
As chair of the Pension Fund Committee, and there are 2 pension items on here, I ought to make the committee aware that obviously I have an interest in those.
And as a non-statutory declaration, I should declare that I'm a member of the Audit Registration Committee of the Institute of Chartered Accountants of England and Wales, which EY utilises in order to have its audit qualification. However, I play no part whatsoever in any of the debates and discussions and receive no papers to do with EI at the ARC, so I'm not conflicted.
Similar to Councillor Whelan, I'm on the Pension Fund Committee as well and member of the Pension Fund Investment Subcommittee.
And just to confirm, Chris is also on the Pension Fund Committee. Thank you. So we've received one public question from Mike Mason, who will be joining the meeting in person. The question was circulated to committee members and published on the website last week. As the question does not directly relate to any agenda item, we will take it now. Mr. Mason, are you ready to speak? Would you like to just summarize your question? And then we'll provide you with an answer. And just to remind you, Mike, you have 3 minutes.
Thank you, Chairman. I hope I'm operating the new controls all right. Can everybody hear me? Yes, Chairman. The question which has been circulated to members is about the failure of the council and their appointed auditors to comply with the requirements of the Local Audit and Accountability Act 2014, with particular respect to compliance under sections 25 and to 27, namely public rights. In the question I have referred, which members have, I have referred to a number of misstatements in the current draft accounts and to similar complaints made in previous objections in 2017 and 2018. These earlier objections have yet to be addressed by the former auditors, BDO, some 4 years after they were advised. I should add here that in the intervening years, I have been circulating other correspondence with the council and with BDO to further explain those objections. In September last year, the former auditor, Lisa Clampin of BDO, indicated in an email that she would let me have her final determination of the objection and statement of reasons in December last year. This did not happen, and I've explained that on the paper that I have submitted in the formal question. The basis of the problem with the accounts is the method of accounting for grant for other bodies which has been received by the council from MHCLG. And I am questioning the methods used in assessing how that grant is accounted for in the council's statement of accounts. Basically, I'm saying in the question that you cannot account for money which is not yet received, and you cannot put that money into reserves because it simply has not arrived in the council's accounts. This is the nature of the grant, which is payable onto the Greater Cambridge Partnership, and it is payable in yearly tranches. And you cannot account for that money all in 1 year. And the way in which this is done in the statement of accounts is, in my view, incorrect. And I'm asking the committee to give consideration to that and to discuss it with the Chief Finance Officer, because in my view, the accounts, the final accounts, need to be corrected. It is my view that £160 million has been overstated. And that is a considerable amount of money.
Thank you, Mr. Mason. So Stephen Howarth will give you a brief answer to your question, and then I'll summarise at the end what's happening next.
Thank you, Jay. Just to provide an answer on the technical aspect of this, I can confirm that we've maintained the treatment of GCP funding consistently from year to year. We've received this grant for several years, and the financial statements have been signed off in each of those years. In presenting the draft accounts, our view is that this treatment is in accordance with the SIPFA Code of Practice on Local Authority Accounting, which states that grants shall be recognised when two conditions are met. One, reasonable assurance that a grant will be received. Two, reasonable assurance that the authority will comply with any conditions relating to initial recognition of a grant, as opposed to restrictions governing how the grant will be spent. The council does not have to have received the cash for funding to be recognised. As some of the money is yet to be received, the council also recognised a short and long-term debtor in relation to tranches of the funding not yet received. While the recognition of the full grant does increase the usable reserves figure in the accounts, the statement of accounts does make clear that usable reserves consist of several categories of reserve and that the whole value is not available to spend on general activities. The future tranches of GCP funding are recognised specifically in the capital grants and contributions unapplied reserves within the usable reserves total. This reserve is only available to fund eligible capital expenditure. Thank you, Chair.
Thank you, Stephen. And if I can just add, Mr. Mason, as we're towards the beginning of this tranche of GCP funding, the impact on the financial statements and in particular debtors is especially noticeable, as you've indicated. And the committee discussed this when we considered the draft accounts in July. The council's draft accounts are currently subject to audit by EY. As a result of the size of this grant, we would absolutely expect it to be considered during the audit. And if it's concluded during the audit that the treatment of the GCP grant needs to be considered further or amended, that could be done ahead of the committee considering the final audited accounts in due course. Just opening it up to the committee, has anybody got any questions, concerns, or anything more you want to understand? No? Okay. Sorry, go on, Chris.
Sorry, Chair. I think it's worth saying, and I'm sure that Alison will agree with me about this, there are any number of accounting rules which don't necessarily always make sense, not merely to the lay public, but sometimes to accountants themselves. Nevertheless, those are the rules which have to be applied. And it seems to me very, very clear indeed that we're applying the rules correctly here. EY have been duly warned on this particular question, which is excellent. And I'm sure they'll reach the correct conclusion at the end of the day. But unfortunately, common sense isn't always the best way to judge sets of accounts.
Thank you for that, Chris. Mr. Mason, Mr. Rowson, you're very welcome to stay for the whole meeting or as much or as little of it as you wish. Just feel free to escape out that back door whenever you're ready. Thank you. So moving on, we're being asked to approve the minutes of the meetings held on the 13th and 22nd of July as an accurate record. If any committee member wants to raise a question on the accuracy of the minutes only, they can do so as soon as I've made one comment. Just to make sure that I was reading them thoroughly, Dawn left in or omitted a phrase on page 13 where it should have said a report was considered regarding what further material relating to the farm's audit, full stop. It should have been, should be published. So it should say a report was considered regarding what further material relating to the farm's audit should be considered. Has anybody noticed any other errors, mistakes, things you feel need correcting? No, thank you. Should we move on then to actions? So sorry, I just need to read what I have in front of me. I see no objections, so we'll take that as carried unanimously. Thank you. So we move on to the updated action log, which is also published in the papers. Are there any updates or questions on this? Chris.
Thank you, Chair. I'm just a little bit disappointed that we haven't had a resolution on the various debt management updates issues that were raised.
Chair, if I may, we've had some through late, so I'll email those out to the committee, but for completeness, I'll also append them to the minutes so they're out there in public as well, if that's okay with everyone.
Anything else from anybody? I've got two issues that I've forewarned Tom about. One is the publication of accounts by this land to Companies House, and the second is progress or lack of progress with BDO. So over to Tom.
Thank you, Chair. So this land have submitted their accounts to Companies House, but as last time I checked, they're not yet visible. So we're hopeful that they will arrive and be visible in the next few days. In any case, the company has published on its own website their audited accounts for the end of the year, and they've also been provided to the members of Strategy and Resources Committee ahead of the shareholder meeting that's happening later this week. And clearly, we had a draft version of the relevant numbers to bring into the consolidated position that we published earlier in the summer as well. On the outstanding matters relating to the objections and the value for money opinions, I'm hopeful of some progress here. With speaking, myself, the Chief Executive and the Monitoring Officer are due to meet with the lead audit partner from BDO tomorrow. There's been some dialogue over the summer, so we are now seeing some renewed progress, and we'd hope to bring forward further details to the committee as soon as possible.
Thank you, Tom. When you've had the meeting tomorrow with BDO, could you notify me of the findings? We have offered as a committee, and me particularly as a chair, to intervene if we felt that would be helpful, and just repeat that offer.
Yeah, thank you, Chairman.
Any other comments, questions? No. Okay, let's move on then. Item 5, starting page 29, is the consultant's report for September 2021. And can I ask Janet Atkin, Assistant Director for HR Services, to present this report? Janet.
Thank you, Chair. I'm slightly concerned about my the sound. If it sounds stilted, let me know and I'll turn my camera off. Yes, thank you for that. So I'm here to present the report of our use of consultants and agency workers for the last 2 quarters to committee. And we've been doing this now for the last couple of years at the request of Audit and Accounts Committee. Case any member with that we with
Janet, you are breaking up a bit, so if you want to switch your camera off and just repeat the last few lines, okay?
I will. Is that better? Hopefully that's better, Dawn. Apologies. So in case any members are unfamiliar with the arrangements we have in place with Opus, in 2016, what was formerly the General Purposes Committee approved the creation of a new company, previously called Opus LGSS and now called Opus Cambridgeshire. And that's a company that was established so that we could access agency staff with lower margins than those charged by the private sector providers. So that's the reference to Opus that you'll see throughout the report. Opus provide information to us on a regular basis about the spend on consultants, and that's contained in the report that's there for you. Just for clarification, a consultant is someone we engage to undertake a specific project or task and provide specialist expertise that we don't routinely have available to us within the council. So the information on the spend on consultants by Opus, through Opus, I should say, for the last 2 quarters is set out in the report, and also any consultants accessed or outside of the Opus arrangement are contained in the Appendix A for you for the last and B for the last 2 quarters. The spend on consultants, we would say, is given the size of the council and the diverse range and nature of services that we have, is not considered to be particularly significant, although that's obviously something that we keep under review, and hence the reporting to yourselves on a twice a year. Section 5 on the report then goes on to talk about our use of agency workers and interims, and again, just to clarify, if this report is new to any of you, interims tend to be people who come in and cover roles on a short-term basis, but existing sort of add business as usual roles. Our agency workers are people that are engaged as a temporary resource, and the general principle that we work to is that an agency worker placement should be for no more than 13 weeks or 20 weeks if it's a placement in a social care role. So again, this information is provided and set out, the spend set out for the last 2 quarters in 5.1. And you'll see that there has been an increase in the spend over the last 2 quarters on previous years. And that is largely down to a significant spend that we've incurred against the public health activity to support the COVID response. So it's not something we would expect to continue. That should see a decrease in that as we move forward. The general sort of context of our overall spending on agency workers is that you won't be surprised, I'm sure, to hear that the majority of the spend is in the social care sector, in roles where we struggle to recruit and retain people, particularly in children's social care and in some of the frontline adult social care roles. That we're not out of kilter with other local authorities. It is a national issue, particularly around social care, social workers, and that's where there's a significant proportion of our spend. But we are continuously and proactively working to decrease the reliance on agency workers and to try and convert to permanent workers and reduce our spend in this area where we can. That was all I wanted to say, Chair. So just if there's any questions from committee, thank you.
Thank you, Janet. So I'll open it up to questions and comments from members. Chris had his hand up first.
Thank you, Chair. The only point I was going to make on this report, apart from saying I'm pleased about it being presented to us in such a clear way, is that I think it would be very useful for this information, suitably broken down between adults and children, to be reported to the relevant committees concerned for noting, just so that they're aware of this, because they're the ones at the end of the day who have responsibility for spend. But I find what's in here, and it's not unexpected, and I think it's been presented in a very good way. But when Janet started speaking, she mentioned Opus Cambridgeshire, and I'm a bit confused here, and I just need to keep track of the external investments that we've got. I was under the impression that the company that we'd been utilising had changed its name to Opus People Solutions East Limited, and I'm not familiar with Opus Cambridgeshire. I wonder if some explanation can be given about that, please.
Janet, do you want to answer that question? Then we'll see what other people have to say.
That is one and the same thing. So I beg your pardon. So the company is now, when we originally went into the Opus arrangement, it was, as you're probably aware, with Cambridgeshire and Northamptonshire, and that has now, since the division or the arrangements with LGSS changed, it is now a local arrangement. So if I may have inadvertently used the inadvertent terminology in that, but it is a Cambridgeshire Opus arrangement. Tom, sorry, I'm looking to whether Tom can clarify the exact name. I may have misrepresented that, Tom, have I?
Yeah, so I think Councillor Baden's right. It's I can't now remember the name either. It's Opus People Solutions East, and it remains, although LGSS is no longer involved, it remains a joint venture between Cambridgeshire and the Northamptonshire councils and Milton Keynes. Thank you.
So my apologies, I've inadvertently renamed that. We'll correct that. Thank you. And take away the action, Councillor, around making sure the committees, adults and children's committees, are advised of the spend in this area. Thank you.
Thank you for that. Yeah, Alison.
Thank you. Just actually a tax-related question around that, really. In view of the number of consultants and agency workers we're using, do we have assurance that there are no off-payroll implications from all of this? Are all of these people individuals being taxed under PAYE?
So in each case where there is a consultancy arrangement, we do the IR35 assessment for each individual to determine whether or not they need to be in
You're breaking up again, Janet, sorry.
I'm so sorry. What I was saying was that whenever we engage any consultant, then we do an IR35 assessment to see whether they are in scope of the arrangements or not, and make sure we're applying that correctly. Most of the agency workers will all be through PAYE. It's less clear on the consultants, and those are done case by case where they're outside of the scope. Then the IR35 assessments are carried out in each individual case. I hope that clarifies it, but do let me know if I haven't been clear enough on that.
Yes, thank you very much.
Alan.
Thank you, Chair. Just a question on the agency costs. You mentioned, and the paper mentions that it was mainly around social care and workers obviously off ill or having to self-isolate. We've got to overspend in the increase in spend, in the first quarter, nearly just over $750,000, and presumably we're obviously still paying those social workers who are off ill. I just wondered, and it may be more for Tom, I just wondered, are we reflecting that pressure, which I know I heard Janet say is obviously going down as we come out of the pandemic, but presumably we've got an ongoing pressure there in 21-22, which presumably we need to reflect in the forecast.
Yes, so we as part of the monthly monitoring process with budget managers, we pick up those exceptions and report them through. I'm not aware that's causing material pressure that's kind of escalated up to committee level. So it's within the budget requirements that that departments hold, but it is closely monitored.
As you mentioned the word agency, can I just throw in a couple of things which are probably nothing to do with this whatsoever? But I went to the Waterbeach Recycling Centre, which is a PFI contract run for us by Amy, and heard that most of the staff there are employed on 0 hours contracts through agencies. So what influence do we have, if at any, through that PFI contract on these agency workers? And does a similar thing apply to staff who are carers who are employed through agencies that we are contracting to provide care for people? That may be completely unfair and maybe not something for this paper at all, but as you're on, Janet, I thought I would throw it in.
In all honesty, it's not something I can answer here and now. I'd have to check with the those who are responsible for those contracts if it's outside of the council's employment. But I'm happy to take that away and ask those questions if that's okay. I will check. I will check with you after the meeting if that's by email that I've got that I'm clear about specifically what you're asking, and then take that away if that's okay with you, Chair.
That would be grand. Shall I email you, Janet, then with the query, and then you can follow it up as relevant?
That'd be very helpful. Thank you.
Okay, thank you. Any other comments, questions from anybody? No? So can we confirm that we have noted the current data on the use of consultants and agency workers? Yep, I see lots of nods. Excellent, thank you very much. So we move on to item 6. Thank you, Janet. Item 6 is the external audit plan for the Cambridgeshire Pension Fund. And can I ask Ben Barlow and Mark Hodgson to introduce the report? Now, just before you do that, we have seen the plan previously, haven't we? Or have we not? But you've done.
You've seen the accounts, but not the auditor's report as yet. No. So that's what we're bringing to you new. So the draft accounts have been in front of the audit committee, and you've got the extra assurance that they've been in front of the pensions committee and pensions board as well. But what you're seeing new is Mark's report, which is essentially saying that these are now in an audited account state.
Okay, thanks, Ben. I thought we were seeing in 2 separate items. One, the audit plan for the Cambridgeshire Pension Fund, and then the next item is the report from EY and the pension fund annual report itself.
Correct. Let me clarify.
Thank you.
So as you can see from the date on the front cover of our plan, it was prepared in May and issued in May and was meant to go to the pension committee and then the audit committee subsequent to that, but it wasn't able to get onto the audit committee agenda for the summer meeting. It had gone to the pension committee. Because we are reporting the findings of the audit as the next agenda item, sequentially, I need to do the audit plan before you as an audit committee first. So here it is, and I'm going to be very brief, but then major on the results of the audit, if that's okay. Is that logical?
Does everybody now understand what we're doing? Excellent. Thank you very much. Carry on, Mark.
Thank you. So we planned our audit back in May, and I think just pull out some key issues at the planning phase are the risks that we had in our matrix starting on page 5 of our plan. And these are consistent in their designation from the prior year. So in a world that was relatively unstable through that financial year, our audit risks in auditing the financial statements are very stable. And because we've got another audit plan later, I'll just go into a little bit more detail. So a fraud risk is any risk where management could, if they were so minded, override a control that is in place to gain a better financial outturn. So there are a couple of fraud risks in there. A significant audit risk is one where it would have a material impact and we believe is likely to occur. And an inherent risk is one that can either be material but unlikely or likely to occur but not material. So a lower designation, but clearly still something that auditors have to consider. So that table takes you through the risks that we have. The main one, or the main two really, are in relation to Cambridge and County Bank, which is a very specialist vehicle that needs a specialist valuation, and clearly we need to gain sufficient assurance around it. And then level 3 valuations, because they are deemed to be hard to value assets because of their nature. They're not quoted on any stock exchange, and clearly whilst they are audited, their accounts lag is kind of 6 months behind when you need data. And we'll come on to the finding of that in a moment, but it's clearly a risk that we need to gain sufficient assurance over level 3 assets because they are hard to value. At the planning stage, we set a materiality level of 30 million, and we were going to report to this committee anything above 1.5 million. And within the detail of the document is the details behind all of those risks, which I'm happy to take questions on, but hopefully that positions how we started the audit.
Any comments, questions, Chris?
2 questions which are appropriate at this stage when talking about the planning rather than the actual work involved. The first is to do with the timetable, and a timetable was issued by EY for all of the audits that they were going to conduct. How are we doing in meeting that timetable so far? At least, what's the impact, if any, on the pension fund audit? That's the first question.
So you're right, we issued our timetable in February, and we are adhering to the timetable. There are a couple of audits which we have deferred because they were not ready. The draft statements weren't ready, or supporting working papers weren't available for us to audit, so they have been pushed to the back of the queue. But the ones we were planning to sign by the 30th of September, my pen is ready tomorrow or Thursday, of which this would be one. Ordinarily, clearly we can't sign a pension fund audit until we sign the county council audit.
Delighted to hear that, Chair. Second question, I'm unclear as to the way in which risk is assessed in terms of the fact that this is the effectively 3rd year after the valuation. The last valuation was 31st March 19, and we're now looking again beyond the period which is actually being audited, but we're now coming up to the 31st of March 22 when the next triennial audit takes place. How much risk is there involved in being this far away from the triennial valuation which took place? Do you need to take significant additional steps in order to cover yourself? I'm aware of the way in which the markets have moved, which is helpful, of course, in terms of negative risk. But I'm just, I did read in here about the distance away from the triennial valuation. Just wondered if you could expand on that in terms of your audit planning.
Of course. So rewinding the clock a little bit, last year was a year in which we did significant detailed testing over the last full valuation. And that primarily looks at the data provided to the actuary in which they can come up with their actual evaluation that then lasts the 3 years, and that is all data input driven. And we were comfortable last year. Clearly, the further you go away, the more things can move, but the audit of the financial statements of the pension fund is based on asset valuations, which are quoted at the 31st of March. The actual liability is only a disclosure note under IS 26, hidden a little bit away, but we have got assurance over the inputs again, and whether there have been any significant movements in any of the input factors that would have a material impact on the valuation figure that was given for 2019. So we have built-in procedures, but our audit of the financial statements is primarily driven by actuals at the 31st of March because it isn't a net asset statement function.
To ask another question, but it's another area I have not knowledge of. Do you take into account what are effectively post-balance sheet events, that is, changes which take place after the 31st of March, in this case 2021?
We do, to the extent that they would impact on the reported financial position at the 31st of March, yes.
Okay, Ben, can I put you on the spot? Were you happy with the plan as Mark has described it?
Yeah, very much so. I mean, I suppose you've got the gift of hindsight here in that you're seeing, because of the way things were concertina due to the pandemic, you're seeing the audit plan, and you're about to hear about the findings of the audit, which show that it's all worked. Yeah, no problems at all with the plan. If I may add just one point around the clarification on risk to do with the valuation period. Something we do within the pension scheme is the IAS 19 and FRS 102 accounting standards that we meet, which is essentially almost like a valuation of liabilities per employer in the fund. So that is a piece of work that is done as well yearly within that 3-year valuation. So just a bit of extra assurance.
Okay, thank you very much. And Alison, as chair of the Pension Fund Committee, you're happy with the plan? And then we'll move on.
Yes, absolutely.
Okay.
So, yes, completely happy with it.
Excellent. Go on, Nick.
Yeah, just as a sort of general way, having spent a lot of time trying to understand what's been going on with the USS, is this pension scheme now what you would regard as being stable? So with USS, the 3-year valuation led to a determined campaign to downgrade benefits and increase employer and employee contributions. Looking at this, it does seem to me that it's a different situation here. And although you had the change from final salary to career re-averaged benefits in 2014, it seems otherwise very stable. And also, is it actually backed by public money at the end of the day, like TPS, or is it a standalone scheme?
Okay, so the first question, local government pension schemes generally are considered to be stable in their both position and outlook going forward. And that's shown specifically here by the level of funding of the scheme, and this one's at least 100%, Fiona, correct me if I'm wrong, which is clearly, if all your liabilities are already funded, that's a very stable position to be in. And therefore, as such, in answer to point 2, it self-funds itself. I'm sure there is a government bond to back it up if it ever got into trouble, but that is not where pension funds operate. They are self-funding into perpetuity, hence why they have a percentage of fund liability that is backed by assets.
Okay, thank you. So we've been asked to note the Cambridgeshire Pension Fund external audit plan in this item, which we have just done. Thank you. So item 7, the Cambridgeshire Pension Fund annual report and statement of accounts for 2020-21. Ben, do you want to introduce this first, or should we pass on to Mark?
Yes, please, if that's okay. Yeah. Firstly, apologies if my wife's choice of wallpaper is a bit loud for everyone. So if I do break up at all, just let me know and I'll turn the camera off. Yeah, really, what we're asking is for approval of what is now the audited set of accounts following the completion of EY's audit, which Mark will talk about at length, or maybe not too much length, about how the audit has gone. It's been quite a good year for us, really. We've hit all the deadlines. And I don't want to steal Mark's thunder, but really we're looking at the full set here. The audit report says, we're in line with the SIT for guidance. It's an unqualified opinion. It's true and fair. View is given by the accounts. It's clear of material misstatement, and there's no unadjusted corrections. So yeah, we're very pleased with how the audit went, and yeah, how we've stuck to the plan that you've obviously just been shown. So yeah, I'm happy really to let Mark go ahead and hopefully say nice things about us.
You can do that, Mark?
I will, yes. So I'll take you through some key messages and end on the good point, if that's okay, because I think it's important about the how we got there as well. So having gone through the plan, when we got the draft set of accounts, we did update our materiality level. So we're working to materiality level of 38.5 million, so an extra 8.5 million, purely because that is based on net asset value at the 31st of March. And clearly the market had rebounded somewhat and had gone up. And therefore we're reporting to you as a committee anything above £1.9 million now as an audit difference. In terms of the status of the audit as of today and set out on page 6 of our report, the audit is complete with the exception of kind of the formal closed procedures we do just before we signing. So having gone through the plan and delivered the audit, we are ready to sign the pension fund audit if we're in a position where we could do so alongside the county council audit from a kind of a phasing and a planning timetable. So I think that's good news that you can have, that we were able to deploy the plan and undertake the audit in the time window that we had agreed with officers. Page 7 onwards sets out the key audit assurances that we've gained against the risks that I have just talked about in the previous agenda item. And again, there are no significant matters to report. And then that links through to section 4 and the audit differences. There are no uncorrected audit differences before you. And there is only one corrected audit difference above the threshold of £1.9 million. That relates to the change in the level 3 assets from their estimate that was put into the draft financial statements at the 31st of March, and then the actuals when we got through signed statements from the fund managers during the audit. So a timing difference between when the accounts were prepared and information we received during the audit. And clearly I've already flagged that level 3 investments are hard to value and the movement does change. So that increased the valuation by £44.145 million. The other point to note is that the disclosure note around going concern met our expectations and linked back to management's assessment of going concern, which was an audit risk area of focus. Taking all of those together, that would lead us to be able to issue an unqualified audit opinion at the appropriate point in time, a draft wording of which is set out in section 3 for you. So I think in summary, to be able to sit here and tell you that we've got all the assurances we need, we've got no audit differences to report, our one timing difference, shows the strength of the close down process the pension fund team went through, the robustness of the draft financial statements we were given to audit, and then the supporting working papers that wrapped around that to provide us with audit evidence, and clearly the support we got from Fiona and Ben across the audit period. So as a committee, I can only echo what Ben said by way of his introduction. It's been a very smooth process and we're in a really good position ahead of signing when the main audit is done for the county. And again, happy to go into any detail behind any of the detail in the report.
Thank you very much. Alison, as chair of the Pension Fund Committee, do you want to say that you are happy?
Thank you. Yes, thank you for the audit. Thank you for the work that has actually been carried out by the previous committee and obviously by the staff. It's quite a challenge managing an awful lot of this, and quite clearly doing so under some of the challenges that we've had over the last 18 months, 20 months has been quite an achievement. So I'd like to give my thanks to everyone involved in getting these. I'm very happy to see the strength that we actually have in the accounts, and it is really reassuring that the fund is in such a strong position at the current time. And it's good to see that we have a clear audit report as well. So thank you, everyone.
Thank you. Chris or Alan, you're also on the Pension Fund Committee. Is there anything further you want to add?
I think it is worth emphasising just what a good position the pension fund is in financially at this time. These things do change, unfortunately, sometimes with, in fact, very often circumstances totally beyond our control. But I have to say that I find the situation far better than I was expecting to coming onto the pension committee. And I've been very impressed by the way in which the pensions have been administered by us. Not everything has been perfect. We haven't met every single KPI all of the time. So there are always things which can be improved. But having said that, I think that this is one of the stronger set of pension statements that I've seen for a very long time. And I'm more than happy to be associated with it and to second what Alison said about congratulating all involved.
Okay, thank you very much. Excellent. Just to be slightly difficult, it's run for Cambridgeshire Pension Fund by West Northamptonshire Council. Do we have any concerns about West Northamptonshire Council and their ability to run this sort of thing for us, bearing in mind what's happened to Northamptonshire County Council? Is one question. Second question was at the extent to which EY look at the investment policies of the fund, or whether they simply note that there are appropriate there are investment policies, and there are a committee to oversee that and independent advice on whether or not we're getting the returns that we should be getting. So two questions. One is, are we comfortable with West Northamptonshire? And secondly, did EY look into how well the pension fund performs as an investment?
If I take that first question, my experience is that working with the pensions team, they have all demonstrated, the ability to deliver exactly what we're asking of them. Where we've actually raised questions with them, we have had concise and prompt responses. So nothing which gives me concerns, certainly that the pensions function is not working in the way that we would hope. And certainly we hope that it also provides a saving by doing it in this particular way. But I certainly have no concerns that would cause me to think that we should make any changes to the arrangements that are in place at this stage. And if I then hand over for comments on the investment strategies.
Sure. So it is the responsibility of the pension fund and its committees to set the strategy through which it invests. Our responsibility is to ensure there is a strategy in place, and then auditing the financial statements to make sure the investments are in entities or investments that are aligned to the strategy, not that they provide the best yield or anything like that. That is purely management's decision. And through the committee, ours is kind of making sure the governance behind that is right.
If I add to that, part of the investment strategy is such that we're looking for a much more stable return as opposed to necessarily investing in areas of greatest risk. So that what we're doing is producing a good level of return, but perhaps it would be a higher level of return if we took away some of the risk. But as we have seen, if we allow the risk to be too high, then the risk to the fund overall becomes extremely high, because we are talking about significant sums of money. But ultimately, we're talking about people's lives.
So I noticed that the amount of fixed income is actually rather low, the fixed income to equity allocations, and certainly a lot lower than in the university superannuation scheme. Is that not a risk factor in that with increasing inflation, the situation with equities could turn round and we could see a reduction in value?
I can answer part of that in that some of the equity investments are actually under a form of hedging to provide a greater level of security on those, so it minimises down risk to an extent at the expense of the up risk on those. Obviously, there is a certain level, and we rely heavily upon the advisors around that. And then if I can hand over to Ben, who I am sure can expand a bit better for me.
Yeah, really. I mean, the asset allocation is brought to the ISC every time we have an ISC. What is reported is a point in time. So we're always looking at asset allocation. It may be that at that point in time, a movement around the asset allocation was happening. I don't know if Fiona, who's in my team, might want to add to that at all. But we're always on top of where we should be invested and as close as possible to the agreed asset allocation and investment strategy.
Fiona, I don't know whether you want to add something, and I don't think it was quite so much whether you're close to whatever the investment strategy was, it's whether or not the current split as indicated there is the right split. But that may not even, that's not an issue for this committee. I don't think it's for the pension fund subcommittee or whatever to deal with. But do you want to just address it anyway? And then Chris.
Yep. So our asset allocation is pretty much in line with other local pension funds. I think there's a part in the statement of accounts, I can't find what page it is, where we're compared to 66 other pension funds, and you can see the comparison of how many equities and fixed income they hold, and it's very much in line with other pension funds. And just to say what Ben and Alison has said, the equities and the fixed income are what they are and advised by our consultants.
Okay, thank you. Chris, final word.
Thank you. Yes, and quite correctly, the Pensions Committee looks very carefully at the allocations and keeps that under review, and that's the appropriate place to do that. There was a comment that you made, Chair, which I just wanted to pick up on because it's slightly unfair, but it's very reasonable but unfair. When a dog gets a bad name, it tends to keep a bad name, and that bad name in local authority terms, the dog is Northamptonshire. And yes, Northamptonshire had some serious problems. They were particularly governance problems, as it happens, but they had serious problems. But the new arrangements which have taken place with the two new unitary authorities, West Northamptonshire and North Northamptonshire, they shouldn't be seen as being successors to Northamptonshire and therefore successors to Northamptonshire's problems. They've been set up very much with the failures of Northamptonshire in mind, and those two local authorities are probably the most carefully looked at and the most scrupulous in the whole country as a result of what that area went through before. So whilst I understand the link that you made, I think it is a bit unfair, and we have to somehow get away with associating the name Northamptonshire with something which is bad.
Quite happy to be reassured on those points, and Alison put me firmly in my place when she assured us all that there is a good team running this pension fund. So that's excellent. Thank you. I would hate to think anybody was suggesting otherwise, and it's sometimes easy to ask the question simply because there is a letter which says from West Northamptonshire County Council to make absolutely certain that everybody is comfortable. So anyway, good point, Chris. Thank you. All right, if there's no other comments, questions, we are asked to approve the financial statement of accounts and note the annual report of the pension fund for 2021 financial year, and consider the findings of the external audit documented in the ISA 260, which we have done. Are we all happy with that? Sorry, go on, Anson.
I would like to abstain from voting on this particular item.
Okay, what, because?
Just simply because my name is in the statements, and therefore it doesn't seem appropriate that I actually then approve them in this committee.
Well, I've got to sign a statement as well. Are you suggesting that means I shouldn't vote? Help us here for somebody, Fiona or Dawn.
Sorry, Chairman. There's no issue with doing that, but it's a matter for each member. If they choose not to, that's fine too.
Okay, so all right. We know that you're abstaining, Alison. Everybody else in favour? And I will be in favour whether I should be abstaining or not, simply because I think that the accounts are very clear and have had a very clean audit from EY. Thank you. Let's move on then to item 8, which is on page 213, the 2021 external audit plan. And Tom or Mark, would you like to, Mark, you'd like to present this report?
Thank you. Yeah.
Chris, could you just turn your mic off?
Okay, so I'll take you through this in a very similar format as I did for the pension fund. Again, focusing on the risks that we have over which we need audit assurance to be able to get to the position to issue an audit opinion later in the year. So the fraud risks, starting on our page 5 in the similar table, are exactly the same fraud risks as we had in the previous year, and are, I would say, relatively standard across the local government sector for good reason. We have identified a new significant risk this year, which we've classed as government grants, including COVID-related funding, on the basis that COVID-related funding has been a significant amount and clearly a lot of public scrutiny on it, and making sure it is accounted for in the correct way, given that there are numerous individual grants with different conditions attached to them, means that the accounting for that is quite difficult. And just for this committee's assurance, that risk will take into account the accounting for City Deal, as well as it's clearly a grant. So that will be part of our review in this year. Property, plant and equipment remains a significant risk on the basis that it is both a material balance, and there were issues with accounting for it last year, as we reported in our audit results report. So we do believe there is a heightened risk that it could be incorrect again this year, and therefore we need to deploy procedures to get sufficient audit assurance over that balance. And then we've included a new inherent risk around group consolidation, because again, there were some issues with the consolidation last year. We need to make sure that those issues aren't repeated, and again, sufficiently brought in this land to the overall group accounts. The other risks in there that I haven't mentioned by name are consistent with the prior year, but I'm happy to take any questions after I've finished this on each of them. So we are currently working, as per this plan, to a materiality level of £20 million, and we would be reporting to you any audit difference above £1 million, but we will be updating that as part of the audit and on receipt of the draft accounts. For this committee's attention is probably section 5, I think, on value for money. No, can't find it. 3 maybe, on value for money. There are changes in the arrangements this year for value for money. So historically, we've said a positive conclusion, so the council does have appropriate arrangements in place. The audit code that we follow, issued by the National Audit Office, has changed that. So we now report other matters. So we're doing kind of negative reporting. So we say that your arrangements are okay with the exception of X, Y, and Z, so reporting negatively. But we now have to issue an audit commentary, which basically sets out how we got to that conclusion, and that commentary will follow in a separate auditor's annual report after we've concluded the audit. So we will bring the draft wording of that commentary to you at the appropriate time. In terms of the timing of the audit, picking up an earlier question, through our planning and agreement with all of our clients, we have planned with Tom and the finance team to commence this audit on the 11th of October. We have the draft financial statements available to us. We've already picked some samples in readiness based off those, and the team is ready to go from the 11th of October for the window that we had agreed. So we are on timetable as we had planned with officers. So that's the high level bits I'd put out, but clearly happy to answer any specific questions.
Okay, just before we come to members, Tom, is there anything you wish to add? Are you happy with the plan?
No, we're happy with the plan and keen to get the audit started on the 11th of October.
And both you and EY can provide the data and ensure that we meet the timelines.
Yeah, so it's, as Mark says, it's very helpful to have some of the samples available, because that will certainly help. I think it's a 6 or 7 week period to complete the audit. I do think that's challenging, but clearly that's the concentrated period we've got, so we'll go at that as well as we can.
Okay, Chris.
Thank you, Chair. I hope you agree that curiosity as part of the nature of a member of this committee isn't necessarily a bad thing, because by asking questions you can sometimes discover some interesting things. And one thing which I found interesting in this report, which was reported as being largely solved, it appeared, but it still made me ask what happened, was the comment about problems that there had been with the consolidation of this Land Limited's figures into the consolidated figures for the council as a whole. Can you tell me the nature of those problems which should be overcome this year?
I will try. I'll have to delve back because it's clearly 12 months ago in my mind. There were some issues with the spreadsheet that in essence added 2 sets of accounts together. And there were some issues in the assurances that we needed to get from this land auditor, so RSM, and some delays in that timeline. And together they provided a real bottleneck at the back end, which made some issues in the figures that were in the draft financial statements upon which we were auditing. So the culmination of those 2 together, from memory, Tom, help me if I'm incorrect, was the issue.
Yes, I think that's right. It wasn't the issues around PPE from the last audit stick in my head much more than this land consolidation, but we're really hoping through the alignment of the reporting dates that there was a particular issue around the 3-month top up and needing to get the assurances from the component auditor. So hopefully by having those aligned dates, that removes that particular issue up front. So that's a good start to that at least.
So if I may, Chair, the problem wasn't to do with the consolidation itself, it was to do with the consolidation process and the relationship with the component auditor.
Yeah, so look, I guess the first issue Mark talks about in terms of the spreadsheet, that is I suppose that's also a process issue, but it wasn't so much the accounting treatment, I don't think.
Okay, thank you. Any other comments? Simone.
Thank you, Chair. Just looking at the audit differences, the last sentence on that statement, other misstatements identified will be communicated to the extent that they merit the attention of the Audit and Accounts Committee. How do we know, where will we see these then, the misstatements identified? If am I right in believing that we'll only see them if they're over 0.9 million?
That is correct.
So where would we see, how will we see these misstatements identified? How can they be communicated to us? Who says that they're merited?
Good question. So that's my professional judgment.
Right.
So we believe that with a materiality level of £20 million, that is the level at which a lay reader of the accounts would be interested in whether the accounts are right or wrong. So that's my true and fair audit opinion. And in order to gain assurance to issue that audit opinion, we would report differences to you as a committee above £1 million, because you need to gain assurance that you can approve the accounts for me to then sign them. And clearly, if there is a significant process issue, for example, or something that's in the public domain that's below £1 million, I may bring it to your attention. So if the senior officer remuneration note was wrong, that has high public attention. No one's paid £1 million, so there wouldn't be £1 million error in it. But if there was a £20,000 error in Tom's salary, for example, that may be more significant and merit the attention of this committee, and therefore my professional judgment may be to bring it to you. But for me to gain sufficient assurance and to give you assurance as a committee, the £1 million is the lowest threshold we would be interested in. So it's nothing is absolute in audit terms.
Okay. Any other comments? I go on, Mac.
Got it right. Yeah, on the value for money planning, I've noticed that the predecessor audit has not yet concluded on their 17-18 value for money conclusion. That seems to be an awful long time. I just wondered why is there such a delay, and how do we push them to conclude that so you can conclude
that's the BDO audit that Tom referred to earlier. That they're meeting again tomorrow, and you're anticipating getting results. But I agree entirely. We need to keep pushing them, as we've been trying to push them for getting on for years. There's nothing else to add, I don't think, at this stage. I've got a few fairly random questions, if I may, Mark. One is based on what Simone has said. If you, through your sampling or whatever, identify an area where it looks as though there's a lot of things going on wrong, presumably you will highlight those to Neil, and internal audit will look at them, will they? Is there a process? I'll give you a list if that's all right. Is there a process for identifying stuff for internal audit to subsequently review? We know that we've had objections from Messrs. Rowson and Mason, and I'd like to hear a little bit more about how you anticipate considering those objections and how we will, as a committee, get to hear your views. Thirdly, you talk on page 230 about PFI models, and I wonder the extent to which value for money is considered within that, or whether that's something separate that maybe internal audit should be looking at. Then on the page 231, it talks about the going concern assessment. So that is very much a forward-looking assessment, and the challenge review or peer review that has recently reported has identified concerns about the high level of savings required by the county council in the future. So is that going to be reflected in your going concern comments? I'm not going to go to Northamptonshire anyway, but what we don't want is for county council to go bust or anything nasty to happen to us. Then the next bit is the timeline, and I have raised this previously with Tom and Dawn about when we're going to have a committee meeting to review your findings, because we've got a meeting organised for November. The next one's not scheduled until February. So do we at some stage need to organise a special meeting to consider your audit findings? And then the final comment is on page 238, you have highlighted that you would like the committee to understand the materiality thresholds that you are setting. So I just feel before we move off this topic, we should confirm or not that we understand and agree these materiality and reporting levels. So a bit of a mixture of things. I don't know how many of those you can A, remember, B, answer. I'll pass them over to you. Thank you.
No problem. I've jotted them down. So if there is an area of accounts where we find a number of similar issues, for example, in the way that creditors' balance has been put together or debtors' balance, then we would consider that as a control deficiency potentially, and we would raise it as a control deficiency in our audit results report, of which Neil clearly has sight. And then we do have liaison meetings with internal audit, and if they wished to pick our brains about what was the issue and whether it's systemic and they wanted to do some work on it, I'm sure Neil and his team would pick that up with us, so it would be addressed there. I'll come to the objection last, if I may. In terms of public finance initiative and the models, we're only primarily interested in the accounting model itself and making sure that's working correctly and feeding the numbers in the financial statements. The point at which value for money was a consideration was when the PFI scheme itself was initiated. So we don't do any retrospective value for money considerations upon it. And of course, that was management's decision at that point in time that that was providing value for money to you as a council. Going concern is very valid points. And Tom and I have spoken about the peer review. And savings do play a key role in it and the medium-term financial plan. And there are thought processes to go through. So my thought process would be, I'm being professionally skeptical as an auditor, I would say I would expect a low percentage of your savings to be delivered. And if that's the case, what does that mean for your outturn position? So how many or how much of reserves would you need to use to backfill for not delivering savings? And we take a relatively pessimistic view of that to make sure that ultimately the reserve position remains above Tom's preset minimum level. And if it goes anywhere near that minimum level, then clearly we have the potential for going concern issues. It is management's obligation to do an assessment of how they've got comfortable that they can prepare a set of accounts on a going concern basis. And there will be a paper that they prepare for that, which we would audit and make sure we are comfortable with both upside and downside scenarios going through that. And Tom has specific responsibilities as Section 151 officer. He would need to adhere to if he thought you were anywhere near a position that was unsustainable going forward. And my usual word around savings is, how heroic are they? Big numbers. I've seen in quite a lot of medium-term financial plans, the deliverability of those is usually a wholly different question. So we usually do take a pessimistic view in our assessment numerically of them. The timeline, I think it's a good point. We have planned our audit in the timeframe I've previously set out. Based on the risks that are in the audit, it should be deliverable in the 6 weeks, but we have encountered problems in each of the previous 2 years. We haven't built in any contingency because that's not the way that we plan our work. So ordinarily, if everything goes to plan and it's like the pension fund, we'll be here in November with an audit results report to present to you. But it may be worth keeping that dialogue ongoing through the early parts of the audit, and Tom and I can discuss whether a meeting between November and February would be merited based on a position statement at a point in time. Am I doing okay so far? Materiality thresholds, again, we do say this committee does need to note the materiality thresholds we're working to, because our samples and the amount of work we have to do is driven by those. So if you want us to go to a lower materiality threshold than £1 million, happy to do so, but there will be cost and time implications of doing it because our sample sizes will have to go significantly above where they are currently to get that level of assurance and report it to you. So you are those charged with governance. We think this is the appropriate level upon which to report to you and set materiality thresholds based on the users of your set of accounts. But if you do not agree with us, you need to tell us, because we would need to plan a wholly different audit. So yes, it's a valid question. I'll park it there for you to have the debate, and I'll come back to the objection after you've cleared that item.
Chris, go on.
Thank you, Chair. The last question, the last answer, and I know, Mark, you were being slightly provocative in giving that answer, but that last answer does beg a few questions. But one which I would immediately ask is, does your audit software have a fixed limit on the sample size there can be for any sample? Now, I've always got concerns about sample sizes that auditors take, and when you're talking about the largest of audits, they are rarely statistically valid sample sizes of themselves, and other types of evidence need to be used to address the shortfall. But I am interested to know if you're still using audit software which has a specific audit sample size limit, for example, 60.
No. It is moved on slightly, and we're using data analytics, so we're able to assess the whole population of transactions now in a far better way than we would have historically, but it is still about getting sufficient assurance. So materiality thresholds that we have on the page in the plan drive our key items threshold. We test anything above a key item threshold and then take a proportion of the lower limit, and that doesn't necessarily equate to it has to be 60, because you could have 2 key items and then a number of others, or the other way around. So it all depends on the balance and how that balance is structured and then broken down. And without going into too much detail, we think that that will provide us with sufficient assurance at these levels. But clearly, as I said, we could, if we went from 1.8% as our materiality level to 1%, which we could do, that would double the sample sizes pretty much. And clearly that is time, that is effort, that is cost.
Okay, thank you. Do you want to just cover the objection then?
I can do, yep. So I'll cover the standard process for dealing with an objection rather than the specific detail. So if an auditor receives an objection from a member of the public, there are a few things we have to go through. One, did they lodge their objection in the window that was available to them via the inspection period? Are they a local elector registered on your electoral roll? And then 2, is it a valid objection? And to be a valid objection, it has to be about an item of account, and it has to have a reason why they think it's unlawful and the action they wish the auditor to follow in determining that. We have received an objection. We have acknowledged the objection. We have not determined whether we think it is valid or not. And the reason for that is because there is some crossover to previous objections which have yet to be determined. And clearly, if it is determined one way in a year that precedes ours, we need to understand what that determination is and whether then it becomes a valid objection for us, because you do not consider repeat topics under objections.
Okay, that's understandable. Are people clear with that? Yeah. Any other comments, questions? So shall we go to the recommendations, and when you're considering whether or not you support the plan, assume that you are or are not confirming your understanding of the materiality and reporting levels. So the recommendation is to note the Cambridgeshire County Council 2020-21 External Audit Plan. All those in favour? Yes, everybody. Thank you very much. Thank you, Mark. You're welcome to stay on should you wish, or you can escape. We're moving on to item 9, which is on page, if I can get to it. One thing we're not short of is paper, or electronic or otherwise. Page 261, Neil, is the internal audit progress report. Neil, would you like to present the report?
Thank you, Chair. Yes, I shall. So this report summarises the main areas of audit coverage for the period since the July Audit and Accounts Committee to the 31st of August 2021. It also outlines a proposed forward plan of work. Just to recap slightly, the role of internal audit is to provide the audit committee and management with independent assurance on the effectiveness of the controls in place to ensure the council's objectives are achieved. Our coverage is planned so that the focus is upon those areas and the key risks which will most impact upon the council's ability to achieve those objectives. Appendix A of this report details a proposed forward plan of work, and that's the area which I always urge the committee to have a look at and see if that resonates with your ideas of where the key areas of risk and assurance would be. The joint management team of Cambridgeshire has considered this report themselves prior to its submission to the Audit and Accounts Committee today. At the last meeting, members asked if I gave a little bit more detail in the covering report. So the covering report is a little bit lengthier than last time, and feedback would be welcome. Appendix B of the main report details all the outstanding audit recommendations as at the 31st of August 2021. And you'll notice that the number of recommendations not implemented includes 26 recommendations arising from the major infrastructure delivery review that became due on the 30th of June. The revised date for the full implementation of that suite of recommendations has been updated by the service to 30th of September 2021. So that's why there's an increase in the number of recommendations that are awaiting implementation. Section 8 of the progress report summarises the open cases currently under review by the internal audit team in terms of investigations, and the cover report itself gives a more detailed summary. Also at the last meeting, the committee asked if I could put more flesh on the bones of the NFI, and accordingly Appendix C has given quite a lengthy summary of the current exercise that commenced in September 2020 and the progress that we've made against those matches. At each of these audit committees, I've been asked to give a brief update on the highways work that we're undertaking, and work continues on the open book review on that particular highways contract. We are currently having meetings with the contractor, and we're having some success in moving towards completing the first tranche of the open book exercise to the year end April 2020. I was trying to get that right. So that's our current piece of work, and we are still experiencing some areas where there are some reimbursements of overpaid amounts on that particular contract. Just finally, I think it's worth noting that at the previous report to the committee in July 2021, I identified, or I highlighted that we hadn't had the annual payroll report for 2021 that was due to be completed by colleagues in Milton Keynes. I can confirm that that still hasn't happened and probably is unlikely to happen. So in lieu of that, the team in Cambridgeshire has done a piece of work on payroll analytics, just to ensure that there's nothing obvious that has gone wrong. And there is quite a lot of assurance given, really, because the previous audits that have been undertaken in that area have given fairly good assurances on the compliance with key controls and the effectiveness of those key controls themselves. And that was it in the way of introduction, Chair, and the committee is asked to note and comment on the report.
Thank you, Neil. So open to members for comments and questions. Chris.
Thank you, Chair. I always find this the most interesting part of the meeting because we get to question the person who does most of the hard work in actually doing all the detailed digging. One thing which struck me, and thank you for the update. Well, I don't know if I should thank you for the update that you've given about the payroll reconciliation, but thank you for providing us with that information. But it is surely worrying that it now looks as though Milton Keynes will be unable to provide the payroll report for 2021. And whilst I'm always interested in looking at what we haven't had, I'm more interested in the future. And is Milton Keynes up to providing what we require for a payroll service as a whole, if they're unable to provide this information, not merely within time, and not merely within the time they said they would, which was late, but at all? It just rings alarm bells to me.
I think there are two angles to that. I mean, first of all, the payroll service itself is a separate body to the audit team who are auditing the payroll service, and it's the audit team that hasn't done the audit of the payroll service. I think traditionally the audit of the payroll service has given a good assurance to this committee and to Cambridgeshire County Council as to the effectiveness of their governance arrangements. It's just the last year hasn't been completed in terms of the audit. We, as I said, have done some work ourselves to just ensure that things look and feel right from our analytics. And quite often auditors would do that anyway in between full system reviews. So we've always taken the view that we have an annual system review and an annual compliance review to give an assurance. Some organisations wouldn't do that. So what we've done in lieu of that full audit is to do some sensible analytical work just to make sure that we're happy, as in I'm happy. So it allows me to give an annual opinion on the key financial systems that affect Cambridgeshire County Council. So I'm happy I can give that assurance, but I think it's important to flag that the report we're expecting on payroll hasn't arrived, so that full assurance hasn't been given.
I'm grateful for that, Chair, but if I'm not mistaken, and I could be mistaken, isn't this the first year that Milton Keynes have actually provided the payroll service, because they were deemed to be the lead council post LGSS, and previously it was done by LGSS. So unless I've got a year wrong, which I could well have done, I might well have lost a year in the last year, many of us have, but I thought it was the first year that they'd actually provided this service. And I'm just concerned, are we going to expect this to be the way in which things work in future, and you'll just have to accommodate the fact that you won't get that report in future years?
I think just to give more flesh on the bones of that, when LGSS was sort of came to be, then it was just Cambridgeshire and Northamptonshire. Then Milton Keynes came on board, and at that time, the audit of the key financial systems was shared out between Northamptonshire, Milton Keynes, and Cambridgeshire. Our responsibility at Cambridgeshire has been to audit accounts payable, accounts receivable, and debt recovery, effectively. And we have had audits of payroll delivered by either Northamptonshire colleagues or Milton Keynes colleagues. So we anticipate, or I anticipate at the moment, that arrangement will continue, because it's a sensible use of resources to specialise the audit in the areas where that work is being performed. So we've already commenced work on it, on accounts payable, accounts receivable, to give assurance for the end of this financial year. I'm looking at Tom a little bit here, but I understand that arrangement is likely to continue. So this year we'll be expecting or hoping that we'll get that assurance from Milton Keynes on the payroll audit for this financial year.
Let's let Tom come in, and then we can, if you see if you've got any other questions, Chris.
Thank you. Yep. So it's West Northamptonshire Council, which is the lead authority for payroll under the new arrangements. The operational managers are the same as they were under LGSS by and large, although there are new leadership arrangements in place. I think in terms of how the service operates, it is one we're keeping a close eye on as the lead authority board. There have been some additional concerns about performance and some challenges for auditors, whether they be our auditors, internal auditors elsewhere, or assisting the external audit. So we're keeping a close eye on that and engaging closely with the managers in that service, so they recognise the priority. They've had some challenges with kind of recruitment and retention. On the audit side, I think I'd confirm what Neil's already said. Really, I think Cambridgeshire is in a, as you know, internal audit has been a shared service as well, and Cambridgeshire has stepped aside from that, and I'm pleased that we've done that to give us, and that's given us some protection from some of the issues that are facing the wider service. I think going forward, as Neil says, there will continue to be some shared audits between the different lead authority partners. I think it's important we make that work from an efficiency and duplication perspective. And clearly there's audits going in both directions. As Neil says, we'll lead on financial operations and we'll be reliant on the partners for payroll. Some of that is work in progress though, and we do need to see improvements next year.
Okay, thank you. Any other comments, questions? I have a few, if I may, Neil. Oh, go on, Chris.
Sorry if there's no one else, Chair, before you. I was interested in the one discrepancy that was identified to do with pensions, where a figure of something over 63,000, I think, had been paid to a person who was deceased. At least reading between the lines, that's what I read as being reported. And I also noted that not all of the areas which had a high or medium risk had actually been checked. In fact, only half had been, or fewer than half had been closed of those which were being checked against the data which was provided. Are you confident that you won't find another 63,000, or for that matter 630,000, when we check these other ones, or do you check these in order of risk? How seriously should we regard this one which has been found? Should we say that is an example of how we managed to target potential risk and it shows the success of the internal audit, or is it an indicator that there may be some more to come?
We just get a selection of questions while you enable you to think about that, Neil and Alan, and then I'll ask my questions. You'll need to write some of these down, Neil, because they may overlap slightly.
Okay, thank you, Chair. All it was, it's on page going forward from 290, the outstanding recommendations over 3 months. And obviously some of those are big things and some of those are relatively minor. And some have been around for quite a while, and I'm presuming that's COVID and things like this that have caused those to slip. I just wonder what impact, if any, that is having on your resources going forward to keep up with the various schedules and audit plans you've got going forward, because some of those are going to take more resource than others, and whether they're having a knock-on effect.
Okay, and related to one of Chris's point, which is what sort of why I interrupted, on page 262, it refers to 2 investigations into direct payments, where you've investigated 2 cases of alleged misuse of direct payments. And I just wanted to understand whether that's because these were from whistleblowers or by somebody, or whether that was actually a proper investigation into a sample of direct payments, and these were 2 which we'd identified as being potentially misuse. And if it is misuse, when do we start to involve the police? Because that sounds very much like fraud to me. Some of the other examples, again, refer to an investigation into potentially a whistleblowing activity, not necessarily an investigation into blue badges or whatever. So that was one question. On page 263, it's good to hear that you've achieved a contract with Pathfinder Legal Services Limited to undertake 70 days of work. I just wanted reassurance that that wouldn't affect any of your work that you're doing for the Cambridgeshire County Council. On page 272, there's reference to, if I can find it, block contracts in adults, and where find it? Somewhere there is reference to use of block contracts, and 30 days proposed for significant use of block contracts in adults and older people services. At the recent meeting of the Adults and Health Committee, we heard about a new block contract and spot contract that has recently been negotiated, and I wasn't sure the extent to which your study here could be expanded to look into whether or not the procurement of those contracts was appropriate and will give good value for money, and also the split between 60% block contract, 40% spot contracts, whether that is right or fairly arbitrary. Going back to the comments about value for money, the external audit will confirm systems, but not whether or not the County Council is is getting value for money from its contracts? And is that something which internal audit has already looked at, or whether you would look at a particular part of a service if we identified the most appropriate ones? I think that's enough questions for now.
It is, because as risk management, I should have brought 2 pens, not just the one that's not working. So I've scribbled some down. So let's go back to it was Appendix C. I'm delighted to say on the NFI. Yes, it was one of the NFI matches, and yeah, there were 553 identified as part of the NFI as potential matches. 242 have been closed. We've passed the rest over to the pensions team, and they're working through them all. And one of those, well, I say one of those, some of those have added up to £63,000 in terms of overpayments, and it could be for exactly the reasons that you've identified. It is material to me. It's not material to anybody in pensions, but it's still money that we should recover, and we ensure that each case is closed. So we follow through to sort of ask pensions, have you dealt with it? So yeah, any match will be followed up by the service who run that particular or administrate that particular service. So I can give you assurance that they will all be looked at. And if there's more updates as they work through the other cases, then we'll bring the outcomes to this committee as per normal. That was that one. After there, we'll talk about. I wrote down blue badges, I think, which was one of your. What was your? Apologies. Could you just summarise ever so quickly what your question was again, Alan?
Sorry, it was about, I think it was page 290. It's the outstanding recommendations over 3 months, where obviously some of those may be being delayed because of COVID. I just wondered what impact that was having on your resource to complete the ongoing jobs.
Yeah, no, it doesn't have a huge impact, because the first action that we take is to ask the management team have they implemented the recommendation. So it really is just chasing up, getting an update. At some point, we would, depending on the materiality of the risk of that particular recommendation, we would then go and give independent assurance that the recommendation has been put in and that the new controls being complied with in practice. So an example of that is that there are 26 recommendations for the mid team within the recommendations chart, and we're scheduled to go back in Q4 to ensure that those recommendations have been implemented and are working well and effectively in practice. But we need to give them a little bit of time to be implemented and embedded before we go and do the same audit again. Otherwise, we'll just keep auditing the same area time and time again, depending on, again, how high the risk is. If it was critical, then we'd expect it to be put in immediately, and we'd get some assurance immediately that it had been put in. So a long-winded answer, it doesn't have a huge resource implication for internal audit. So then there was a question about the blue badges and also the 2 direct payment cases, I think. The direct payment cases are, obviously don't want to give too many details because it's still a sort of work in progress. It's still a live case. But where a direct payment isn't being used strictly in accordance with the care plan, isn't being used for the care that was intended, then internal audits help the service to understand what action can be taken, and that can be to put in a separate care package and to stop the funding in that particular way. And in these cases that has happened. In terms of police action, that wouldn't be an audit consideration at this stage. That'd be more for the service, because there's a range of reasons why different types of care is given, and that's probably it'd be social workers would would be the experts in determining what the best course of action would be. It's quite a vague answer intentionally because it's a live case, but I wouldn't necessarily say it's fraud. I would say that it's where the payment hasn't been used absolutely in line with the way it was envisaged it was going to be used.
My supplementary question to that was, did that come about as somebody tipping you off, or was it you did a piece of work looking at direct payments for a number of cases and that was one of the examples that you found? And then the same applies to blue badges and some of the other things you've described.
In both those cases, we've got a good working relationship with the services who run those particular areas, and they contact Audit for advice and help. So we'll do the spreadsheet bit and identify the extent of the problem in financial terms, and in blue badges as well. We do the same type of thing. We see whether or not we think it is misuse, and it's usually it is a service that comes to us. However, blue badges could get picked up as part of the NFI exercise. I think in this case that it was a service coming to us on this particular example. So it can be a whistleblowing, it can be NFI, or it could be the service asking Audit for some help and support.
Thank you very much. And then some of the other comments about block contracts and the like. I'm happy to brief you on the paper that went to adults, and then you can consider whether or not it's something you need to incorporate or look at separately.
I think that's excellent. That's exactly what I'm hoping this committee does, is to bring that type of thing to our attention. So if you could forward me details of that, I will ensure that that is included within the brief for that particular piece of work that's highlighted in Appendix A.
And then similarly, perhaps the last item is ensuring value for money, and just remind us of your role compared with external audit, which I think confirms we have governance and systems, but that doesn't necessarily ensure that we're getting value for money.
I'll do VFM very last, because I think an LGSS, sorry, the law questioned, having won the contract to provide 70 days, will that have an impact on resources? The simple answer is yes, it will. And that's incumbent upon myself to go out there and try and recruit more auditors to ensure we fulfill all plans. We're probably, in a way, we're sort of honor bound and committed to offer that service to one of our key partners. And you know, I think it'd be disappointing if we didn't do that. But it does give us a resource pressure. I can't sit here and say that isn't the case, because it does. And we have had a high turnover of staff recently, and we are recruiting, or going to recruit very, very soon, we hope. But the market's tough out there.
And look, Tom,
then value for money.
We would hate, I think, as a committee to hear that we weren't able to deliver our audit plan because we didn't have enough people, because those people we did have were working on the Pathfinder contract.
Yeah, so I would say, Chair, I think that's slightly separate issues. So that the income from Pathfinder covers the cost of providing the audit service to them. We have also got vacancies in the audit team which we need to go out and recruit, but we would need to do that anyway. So it's just resourcing up to that level, and Neil is well underway with that as well.
Thanks, Tom. That was a much better answer. Thank you. VFM, I wonder if you could answer this one for me as well, because it's a very difficult one to answer. I mean, I'd like to say yes, that's what internal audit does through its work. One of our key considerations is this effective? Is this system, is the governance effective? Is it proportionate? Is it bureaucratic? Are the outcomes that have been set being measured, and are they being achieved? However, VFM is a very interesting thing to many people. Different people have a different view as to what value for money is. So if a decision's been taken that this is value for money, so for example, a contract, if we decide to, I'll use, I don't know, a sort of recent example. I was once asked, is the Ely bypass contract value for money? And the answer is I don't really know, because the decision taken as whether the money spent on the Ely bypass is taken by members and people who consulted with as whether or not it's value for money. All I would be able to do is to say, did we spend the right amount of money in achieving the outcomes expected? So I can give that assurance that when we look at jobs or contracts, that we're paying the right amount to get the outcomes that were set. But value for money is a sort of wider consideration that the audit wouldn't give an opinion on. We'd be able to say you went through the right governance arrangements and procedures to ensure that the right decisions were taken. So it's a bit of a half answer, but yes, we can say that we've spent the right money on achieving the outcomes. But what I'm not able to say is actually it's value for money, because that's a more nebulous area.
Right. Well, you left us with food for thought. You are looking at the highways contract to determine whether or not we're paying the right amount of money for the outcomes that we're getting. And I think that there are other contracts like, and I gave the example of the PFI contract recently for household waste recycling, where we are several years into a contract. It's due to finish at 2026, plus or minus 5 years, or plus 5 years potentially. So and the amount which we're paying is varying according to the amount of waste that is generated, the recycling that they can do, the external market for that recycled material, and all sorts of things like that. And so as a member, I'm always interested in thinking, are we getting, and in my terms, simple terms, value for money for what we're currently doing with Amy? And I have to go with what officers tell me unless somebody else is able to investigate it and delve a bit more deeply. Anyway, we will leave. Go on, Chris.
I know we've come to the end of this particular agenda item, but not that I wish to make this sound too strange, but I do occasionally look at the reports produced by auditors for other local authorities. And I happened to come across one a week or two ago, produced by EY as it happens, an interim report, but an interim report for that local authority for 2018-19. And it set me thinking when I read that and looked through and tried to read between the lines. The one thing which we take for granted, and I've always taken for granted, I've never bothered even questioning it, is that sufficient resources are made available by the finance department of the council to enable audit work to be done and done expeditiously. Now, I'm not going to ask Mark to comment on this because it would be invidious to do so, but it's something which I feel internal audit should have as one of the markers that, I know Tom's, there's no problem we've got at the moment, I'm not suggesting that for 1 second, but seeing what has emerged in that particular local authority over a number of years, I think it is a particular marker which this committee should particularly request be looked at by the internal audit function, just to give that the tick so that we know that the finance function is devoting sufficient resource to audit. And I know you are at the moment, Tom, I'm not making no complaints at all. It just shocked me that it could fail in any local authority.
I'll go first and let Tom go. I mean, it isn't something that internal audit would ordinarily look at. And I'd have to give it some thought as to how we would carry that out. But I honestly think that Tom would be better, or finance would be better to consider that question themselves and to give that assurance themselves. I don't think internal audit auditing that would necessarily add a great deal of value unless it was failing.
I've just been thinking that through as Neil's talking, and I want to check I've understood what Councillor Bowden said. I think you're referring to the resource that the finance team and indeed the wider organisation, property team, etc., devote to the annual accounts process and having that externally audited. And that is something we have kept closely in mind. We've indeed increased the kind of dedicated finance resource to that. and it connects up actually to the wider issues facing resourcing of the external audit sector, the Redmond review, et cetera, and it connects to the level of kind of overrun fees we could expect to see from external audit, depending on the quality of the work that comes forward. So this year is an important barometer, I think, that we continue that progression that we saw last year from the year before of smoother audits and higher quality accounts in the first place, backed up by being appropriately resourced.
Okay.
So I've raised the point, and I hope that members will just keep it in mind, because I'm quite shocked that any local council should find itself in a position where it's failing to provide necessary resource for audit effectively to take place. And we're not in that position, we're not even close to that position. We're on an improving trend rather than a decreasing trend. But nevertheless, now that I've seen that happen in one place, I'm certainly going to be very careful in Finland as well to make sure that it's always in the back of the mind.
Okay, thank you very much. If there are no other comments, thank you for the report, Neil. I think from the discussions we've had, we do like the comprehensive nature of your report, so I would continue to do that. I would urge members that if you can think of topics that you feel we should be investigating, and have a chat with me or direct to Neil, and we'll see how we can fit it in the audit plan. So we're asked to note and comment on the report, which we have done. Thank you very much. Neil, you're on next item 10, which is on page 301. And that's about the proposing a change to the risk and assurance ratings used in audit reports. You want to introduce that briefly?
Thanks, Chair. Yes, this was in direct response to the last meeting where I think members expressed a view that they would like some more clarity on some of the risk and assurance ratings. It also resonated with me in the meeting because it was something that we had wanted to look at, and the opportunity that was afforded us when we sort of moved slightly away from the LGSS team and looking more towards Peterborough. It gave us a chance to have a look at what would be best for Cambridgeshire. We probably felt that if we were going to be auditing the sort of same director from a Peterborough and a Cambridgeshire perspective, it'd be better to try and align our assurance ratings as far as reasonable. So we've had a look at it and hopefully tried to put a paper that's hopefully clear to members as to how we're going to categorize our recommendations and our opinions. The two big changes probably, you know, I think I said at the last meeting that I never ever really understood what satisfactory meant as an opinion. It felt like a cop-out. And if I was a receiver of a report that said actually it's satisfactory, but here's 5 recommendations, I'm not sure I would rush to put the recommendations in because satisfactory sounds good. So we've changed satisfactory for moderate. It probably isn't any better, but it's at least it doesn't say satisfactory. I mean, just to also reiterate at this point that this is the sort of stuff that underpins a report. The most important part of the report isn't how we categorize things or how we explain what the categories are. It's to have a compelling argument and rationale for the recipient of the report as to why it's important to put the recommendation in. Because if we can get our colleagues to understand why the recommendation will add value to the governance of the organisation, then it doesn't really matter how we categorize things. But you know, we have brought it here for your perusal and challenge. The other area as well, we sort of tried to make it more plain English as to what level of recommendations we would use going forward are. The ratings that are used at Peterborough are essential, high, medium and low. We didn't like that hugely all the way through, so we've tweaked it a little bit to say essential is an action that's imperative, i.e., you know, it really is something critical to the organisation and it exposes to a significant organisational risk. High, it's imperative to expose to avoid exposure to a significant risk in the service area. Medium, we think you should do something really. But you know, if it takes you a few weeks or months, we would understand. And then advisory, you know, which means we're probably never going to ask you again. But if it was us, we would think about doing it in this way. So we've tried to make it more plain English, and you'll be the judges of whether or not we've actually achieved that. We've also looked at some standard timescales, which is probably more important. For essential recommendations, and we did discuss whether or not 2 months was too long, but we felt actually that was probably fairer to set a realistic target. So for essential recommendations, a maximum of 2 months to implement remedial action, and also internal audit will have gone out there within that period to ensure that that remedial action has been taken. High recommendation is within 3 months of the recommendation. Medium is 6 months, and advisory, as I said, we wouldn't follow it up. So that's probably enough introduction, but that's, you know, sort of feedback would be welcome.
Thank you very much. Any feedback, comments, Chris?
Thank you, Chair. On 2 other local authorities over the last 2 years, I've had a very similar discussion about the word satisfactory when talking about the assurance frameworks which we've got in place, and the way in which assurance ratings are given. And in both cases, one was an audit and risk management committee, the other was a corporate governance committee. In both cases, the answer given by the internal auditor was tough. Those are that's the standard wording which is used. We have to keep it regardless. Now, I'm interested to hear you suggest change from satisfactory to moderate, and I was a bit surprised by it until I started thinking about it more. And satisfactory doesn't sound at all bad, does it? Whereas moderate sounds, well, sounds a bit moderate, sounds a bit worrying. And one should be a bit worried by a satisfactory, using the old terminology, assurance rating, which is given, because it is indicative of failings in the system. They may only have a medium impact, but it nonetheless is a thing which we should be concerned about. So I'm really grateful for this change. I think it's appropriate. I'm pleased it's possible. And now I'm going to go back to my other 2 authorities and say to them, oh, well, I'm afraid our internal auditor in Cambridge disagrees with you, and we can change the word satisfactory. It is a word which has been around a long, long time in local government work when talking about assurance ratings. And I, for one, will be pleased to see the back of it.
Thank you, Chris. I agree, Simone.
Thank you, Chair. Yeah, it does actually make, you know, total sense. The only thing that I see is the advisory. When you look at, you know, what it means, advisory. So basically, you're saying that you can say to them, this is advisory, but actually we're not going to follow it up. Implementation not followed up by internal audit. So the next time you do an audit, is it still going to be there? You know, are you still going to be picking this up? That's the only thing that, you know, I would probably say, well, yeah, it's advisory, but they may not do it. And then you're just going to keep picking it up.
Yeah, I think I don't think we'll use advisory that often. It's fair to say, but yeah, if we had a conversation about maybe a value for money suggestion, something we felt would be more effective, and the service looked at it and decided it wouldn't be, then we wouldn't keep recommending the same thing, unless of course the head of service changed, then we probably have just another go as well. But we wouldn't ordinarily go back with the same advisory recommendation. We probably understand why it doesn't work for the service. And actually, if we're having an advisory conversation and it became clear that it absolutely would be better for the service, I'd probably move that from advisory to medium anyway. So yeah.
Okay, any other comments? Mark, are you impressed by this? This is something that other authorities should be using or are already using? You just put your mic on.
I think it varies depending on which council you're at. and I place more emphasis on the meaning rather than the word used. So as long as you're happy as a committee, you're getting appropriate assurance at the various levels, the word is irrelevant or adequate or satisfactory, or whatever
I think I've told this story before, that when I was working and I used to get my rating up every year, you could get fully satisfactory. And I never understood what that meant. But anyway, there we go. So I think we're definitely happy with the revised terms. I slightly share Simone's concern that if you write something advisory and you don't follow it up, there's a temptation for that they won't do anything about it. But let's see how that goes. And the most important thing, as you described, is the words that go around the marking rather than the marking itself. Excellent. Okay, thank you very much. Thank you for doing this. And I think we're all content to accept that recommendation. Now we've just been going on for a couple of hours. I wasn't anticipating spending much time on the finance report. And then we've just got the agenda planned and training plan to go. Do you want a 5-minute comfort break, or should we just finish? We just keep going.
I don't mind, Chairman, but for those of you who understand County Council laptops, mine keeps telling me that it's going to reset itself in a minute to complete installation of application. And I have no control of it. So mine's going to switch off in 5 minutes anyway. So, but I will try to follow.
Well, let's try and be quick then, Mac, and work through this. Now, Stephen, thank you very much for doing giving us the finance report. I know you did look into seeing how you might be able to summarize it, but that really wasn't going to make much difference. So what we've basically got is something which has already been to strategy and resources, and our purpose is to provide independent scrutiny of the council's financial performance. This is something that the previous chair used to ask to look at every time. I'm still slightly skeptical of the additional value that we can provide other than noting it. But if anybody, Stephen, if you want to just very, very briefly introduce it, and then we'll see whether anybody's got any specific comments.
Thank you, Chair. Yes, this is the Integrated Finance Monitoring Report as at the end of July. This is the principal summary management accounts of the organisation. So in a sense, they're already summarised and generally in the report reported on by exception. And we have tried to draw attention at the very front of the report to which the key sections of the report where they provide exceptions. Just for very brief overview, on page 308, the report does highlight the revenue forecast position is a £930,000 underspend, which is about 0.2%, and a capital underspend of about £1 million, which is about 0.6%. As you say, Councillor Wilson, you did challenge the sort of the length of the report, and as I say, we've tried to highlight where the key exceptions are, and if it's not something that is adding value to the committee when we meet here, then I'm content if you want to just take assurance that the other committees are looking at their finance monitoring reports, which they all do. Thank you.
Okay, any comments, Chris?
I'm just concerned about the timeliness of this. Since the information is provided to the various committees and maybe more relevantly to strategy and resources, I just wonder where the added value is of us looking at this. We certainly shouldn't be taking it apart and starting to have arguments about individual items of spend. That's not appropriate for the audit committee. And it's only if something were to be spotted by us in this to do with the overall controls that are being exercised by the council or by part of it that we should be interested. And to be honest, I don't think that's very likely. Now, having said that, it may be argued that we should have it in just on the off chance that some section were to go off the rails and were to stop doing this properly. But officers would pull them up soon enough anyway. Strategy and resources would pull them up. We're almost a third line of defence here, and we're a very late third line of defence at that. So I do wonder what the added value is, Chair, with respect.
To say, I know we've had this discussion way back in the past, but as you said, it was a previous incumbent's desire to have this. But to me, it's always been a case, if those committees have any concerns and want to refer it to us, then that's a different matter. But we shouldn't be starting it off, but my view hasn't changed.
No, I must admit, I tend to agree that we can't add much value to this, but certainly if there are things which other committees are concerned about, they can refer it to us, and we probably need to make sure they are aware when they consider their finance report. So maybe that's something which Stephen can include in next set of reports to service committees. The only thing I was going to raise was the savings tracker, particularly bearing in mind Mark's comment about the likelihood of achieving savings. And we've got 6 black savings indicating that there's pretty much no chance of getting those, and 1 red one, which is not yet on course and might be difficult to achieve. Whether there is anything that could be, whether there's anything you wish to add to that or not. I mean, it's all here. But...
Yes, so you've got the full savings tracker. You can see which parts of the organisation the black or already red savings are in. But just to bring us back to the overall position, those under delivery of savings are clearly being mitigated in some form within the services. Obviously, the delivery of savings is something that is kept under review and is a bit of a concern potentially looking forward, as we do have substantial savings to make next year and over the medium term. And this is one of the control mechanisms to bring out where the under delivery is and to enable mitigations to be put in place well in advance or in a timely fashion.
Okay, no other comments. So we have noted and commented on the report, and we've suggested that Stephen identify to the service committees and strategy and resources committee that if they have any concerns that could be picked up by internal audit, that the audit and accounts committee would be delighted to look into it. I think because we've potentially only got 2 more meetings for the end of this financial year, if we continue to receive this financial year, then we can determine whether or not we want it next year. Particularly as there's not much effort required from Stephen or Tom. Okay, thank you. Let's move on then to the agenda plan. And Dawn, do you want to introduce that item if I can find it?
I think it's page 366, Chairman. I don't have anything to add to that unless members or officers do. Also, we had a training session this morning. Just wanted to check whether there are any other training requirements that members, areas which members were interested in, possible seminars, even if it's, or even if it's just like a one-to-one training opportunity.
Well, let's deal with training first. No, any training requirements?
Chair, I'm happy with any.
Seriously.
I think I am too, Simone. So on the basis that the advice tomorrow was to be nosy, naive, and look at the numbers, then anything associated with that would be up our street. Right, let's go. So, but I'll have a chat with Neil and Tom as to what might be appropriate for us. So going back to the agenda plan, Chris, you've got some comments, and then I've got a couple of comments as well.
Just one, Chair, if I may, and it's a matter of public confidence, especially in the light of the recent meeting that there's been. Considering actions being taken against councillors who are no longer councillors, I wonder whether it would be appropriate. In fact, I think it's necessary for public confidence to have on the agenda paper for the 25th of November, the Manor Farm report and its publication in however redacted a form may be required, because there is an increasing danger that people will think that something is trying to be hidden here. Now, we know that no one's trying to hide anything at all. But the general public, and there are individuals within the general public who have an interest in this, they are able to utilize the failure to report as being being an indication of something which needs to be hidden. And we must maintain public confidence in the council and the integrity of the council. And I believe the only way we can do so is by publishing the report in full, but appropriately, and in many cases quite heavily redacted. And I think it's appropriate for us to have a conversation about that and a discussion about that on the 25th of November.
Okay, thank you.
I would second that quite strongly.
Okay, Fiona's just turned her camera off. I'm hoping that means that she is going to speak. We have already published the 31 recommendations relating to the management of the farms, and we have to be extremely careful how we publish other information that doesn't name individuals of the county council or make accusations that are unfounded against other people. When we've looked in this before, it had been felt that publishing the whole of the Mazars report or all of the previous internal audit report was probably not the best way of doing that, and that there were other reports which were released which provided the information which was in those, but didn't have all the redacted information that would be without all the redactions that would be needed if one was to publish the full report. But one of the questions I was going to ask Fiona was constitution and ethics, based on recommendations that came from Mazars and supported by us and others, have instructed an independent person to look into the conduct of a previous councillor, and that report will be going back to constitution and ethics, and in due course should come here for us to be sure that everything has been followed up that could be. But Fiona, would you like to give us an update on where we are with that and at what stage it would be appropriate to come back to this committee?
Thank you, Chairman. I'm not sure I can comment any more about this in open session. In fact, we might have said more than was appropriate already, really. Constitution ethics have started its own procedures, and there will be a report back at the conclusion of that
Fiona,
procedure.
Do you want us to go into closed session then, in order that you can update us?
Yeah, I'm happy to do that. Yeah, if you would like to make that resolution.
If that is easier, if we just deal. Yes, yeah. So if we just deal with any other issues around the agenda plan and then come back to Manor Farm, if that's okay. I hope I haven't said anything that we shouldn't have done, but I'm not sure that we have. Let's cover other matters around the agenda plan. So, Alan.
It's just one point we touched on earlier about obviously the timing of the finalisation of the accounts, whether we needed another meeting or to move the dates. I don't think we really got to the bottom of that.
That was on my list as well, and I think the answer is that Mark and Tom are going to chat during the beginning of the audit itself, and then advise me, Dawn, and the rest of us when we could realistically get their responses. So we'll definitely get an update of some sort at the November meeting. It's whether or not it's the full finalised report. We can't wait until February, so we're going to need to hold. We may need to hold another meeting in December and January, but we can determine that at the beginning. Okay. And then the only other item which I thought of was the external review of this land, and that will be going back to Strategy and Resources, who commissioned it. I think that the Audit and Accounts Committee have a role to confirm that the recommendations from the external review are being implemented by Strategy and Resources, and for us to just have a general view on the comprehensiveness or not of the review, and whether it's addressed all the points that we would wish it to have addressed. So I think that could come back to the November meeting, couldn't it?
Well, I don't think Strategy and Resources will consider the review until December, so it would need to follow on to a later meeting.
Okay, I thought the report was going to be finished by October.
Yep. So I think we will receive the report in October, but I'm not sure yet that will be ready for the November S&R committee, given the kind of lead-in publication.
Okay, well, let's put it on some sort of forward look that we wish to see a report on this land and the activities that S&R have taken. Any other items on the agenda? Otherwise, we're content that everything that we're expecting to see on it is on it. Excellent, thank you very much. So I think that is the last item on today's agenda that we're going to hold in public. We will now close the meeting